necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
All right, hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. Fantastic weekend event. We had an almost full house here at the office where we taught people how to invest in real estate. That's what we do. You know, we got into a real interesting discussion yesterday regarding the stock market. It was funny. I was listening to a couple of commercials here during the radio show, and one of the commercials was talking about a hot stock. Email me now for a hot stock. And, you know, there's nothing wrong with that stuff. It just, here's the reality. You've got to build something that lasts. And the problem with the capital markets, the problem with the stock market, the commodities market, the bond market, all these markets is A, scalability, and B, am I able to teach other people how to do it? Now, you can teach people how to day trade, but if I'm to leave a legacy, if I'm to leave something behind for my family, am I leaving them behind a day trading account? Because day trading sure sounds like a job to me. Are they going to have to look for the next hot stock to invest in? Or is it easier to show them how to buy a piece of real estate and then hand that over to a property management company like Property Care? And then just go on down the road cash flowing. This little property produces cash because of the monthly rent. I mean, how hard? I mean, when you really get down to it, one of the things that's really great about real estate is it's incredibly easy. In fact, until about 1977, that's really what most Americans invested in. When Ma and Pa were going to sell the farm, they either leased it out to other farmers when they were ready to retire, or they sold the farm. They were the beneficiaries of owning that asset. The problem with the last 40 to 50 years of how investing is taught to the masses, or how investing is forced on the masses. When you really look at it, you're forced through your employer to participate in their retirement plan. That's really the only option most Americans have. And since the advent of the 401k, the vast majority of Americans' money is in the capital markets. I was reading a fascinating article this morning about oil. I like to kind of keep my hand on the pulse of the oil market. If you've noticed in the last week or two, oil has softened a lot. And the gentleman I was reading has been is an oil and gas trader with over 30 years experience. And he cannot explain why oil is softening. In fact, his only reason that he can even come up with is the, quote, impending trade war that's going to happen in the United States. Although I'm kind of curious why that would decrease the cost of oil. But he doesn't really get into that. All he says is, the only thing I can point to that's out of the usual commodities market, out of the normal supply and demand of oil, The only thing that can explain these change in prices is this possible trade war. How would you like your wealth dictated to you by a foreign government or your government or your company? I just don't understand. I get so confused when people tell me, oh, well, I'm doing this and the stock market is a, quote, better investment. Maybe it's a better investment for you. I don't know. But when I put numbers on a spreadsheet, I'm hard pressed to it doesn't, truth be told, it doesn't even make any sense. On the long term, the stock market returns about 11.5% over the long haul, before expenses and all that other stuff. Let's just call it 10%. The problem is a 10% rate of return is not enough to get you to retirement. It's just not. It means that your money will double every 7.2 years. The problem with that is you have to deploy so much capital so early on via your savings that you just don't make it to retirement. That's why most Americans don't make it to retirement. That's why the vast majority of Americans retire poor. That's a reality. You can Google search it. It has a zillion articles on it. And you probably know you've got family and friends that retired, that life doesn't look real glamorous. Here's the problem. And I'll go back to my favorite blog post on Mr. Money Mustache. And it's called The Rule of 25. And it is absolutely perfect. Take your annual expenses, multiply them by 25. That's how much you need to retire. A family that spends $100,000 a year, they're going to need $2.5 million in retirement. Here's where things get interesting. When I mentioned that at our weekend retreat, I see people going, yeah, that sounds about right. By the way, run this rule of 25 by any of your financially astute friends or any of your friends who are money managers. Here's the best way to bring up the topic of conversation. Say, hey, John, let's say I've got $100,000. Let's say, my expenses are $100,000 a year. How much do you think I need to have saved up in retirement? You'll be shocked how close it is to that rule of 25. It's real close. For some people, it might be 23. For some, it might be 27. For the sake of planning and discussion here on the radio show, 25 is pretty darn close. So you need $2.5 million. Family of, say, a 4, which would be a 2 at retirement, because hopefully those kids are out of the house. You need $2.5 million. Here's the problem, and why I mentioned our weekend retreat. When I start sharing this math with folks, a light bulb kind of clicks on. And the successful people in the room kind of start looking at each other and go, it took 20 years to save $1.5 million. So I'm about $1 million short. And then they start thinking, well, here's the problem with that. I'm in my late 40s, maybe early 50s. I probably got another 10, 15, could stretch it to 20 years of retirement. So I could probably pick up another $1.5 million, assuming everything goes right. A lot of people are involuntarily retired in the middle of their peak earning years. And this is really a male phenomenon. When you really start digging into the data, I'm really talking to the men in the group. How many of you guys, either you, family members, or buddies of yours that have been involuntarily retired, rifted, unemployed in your 50s when you are making the most money that you will make in your career?
2 minutes.
The problem is you guys that are really good at your jobs, you start getting paid really well, and then when the company has a handful of hiccups, you're the first one to go, or in the first couple of rounds of being rifted. And all of a sudden, here you are, a $250,000 a year guy. You've got a great career. It took you 30 years to build, and now you're looking for that next job. Well, there's not a whole lot of those jobs out there, is there? And where you thought you'd be able to add another mill and a half to retirement in those last 10 years, maybe 15 years, now you can't, because you don't have the income to put into your capital accounts. That's the problem that I see. I see two big problems. One is you're beholden to your employer for income. That's not necessarily a bad thing. I'm not bashing that. But know that that is directly related to how many dollars you can save for retirement. The second problem here is your employer only offers one means to retire. They will not allow you to. Most employers don't have self-directed IRA accounts like Quest IRA does, where you can go in and then invest those dollars into single-family real estate, into multifamily, into commercial real estate, into private placements for friends of yours that start private companies that need capital. You're not able to engage in some of the most fun ways to invest. And by the way, those are also the areas that you can invest that have the highest rates of return. Your employer does not allow you to do that. So what are you to do? And what we do is we invest in real estate. That's what we talked about this weekend. I'm not saying don't invest in your company's IRA 401k plan. But what I am saying is you need to look for investments out there that make sense from a return basis. Jason Bible, Right Path Real Estate. We'll be back right after the break.
Mike's off.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process,
this is
and
cool.
recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. or online at benchmarkbroker.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
All right, 1
Real estate
minute.
Investors, do you need a
Okay.
lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Let's see here.
This is Business 1110.
Morning, Matt. Brian?
All right, stand by. Here we go, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Tesla stock tumbles on news it is seeking cash back from suppliers. That's the company equivalent of going to Walmart and buying a chainsaw, working in your yard the whole weekend or on your ranch with a chainsaw, and then returning it on Monday morning. Like, we can't afford the chainsaw. This is great. I like Elon Musk, but the way they're running that company, I don't get it. Their cash burn is $500,000 a day. They're burning $500,000 a day in cash. I was reading another company last night. There's a big YouTube guy. I'm launching a new podcast and YouTube channel and blog and all that stuff. It'll be sometime in the fourth quarter. I'll announce it when it's all ready to go in the next couple of months. And I was watching Casey Neistat last night. And Casey is an interesting guy. He sold Beam to CNN for the rumor is $25 million. Now, I don't know what he had into that thing, but he had a lot of other investors. His cash burn was $180,000 a month, which I thought was comical because I'm like, man, we've started companies before that cash burns not nearly that much, but it's significant. You realize how small some of these tech companies are. So CNN buys Beam for $26 million, somewhere around there. And then I think Beam was bought in November of like 16, and then it was closed. It was shuttered like 3 months later in January. I don't know what CNN ever did with it, but they just wrote a $25 million check and disappeared 4 months later. You know, that's the stuff. Those are the companies that you're investing in. I'll tell you that right now. People are investing in Twitter. I asked this great question this weekend. I said, hey guys, when did Amazon finally make a profit? I ought to Google search that. It wasn't but a handful of years, like maybe 3-4 years ago. Finally breaks a profit. And here's the problem. We are now just throwing money at Amazon. I mean, Apple, I understand. Apple, I get. Like, they make so much money, it's ridiculous. But you got Amazon, you got Tesla, you got Twitter, you got all this weird stuff. Facebook's another one. It's like, now, I understand that our society is changing and these companies have got value and all that, but the question I keep asking is, at what cost? You know, if most people are investing in these things as a means to retire, to reach financial independence. And my question is, when do you know to sell? Because the problem is, these companies don't produce enough of dividend, if they have one at all, to really live off of. So the reality is, at some point in your retirement lifetime, you have to liquidate those stocks in order to live. You're going to build the nest egg, and then you're going to go in and eat the nest egg. That, even before I got into real estate and I was doing my own finances, my wife and I trying to figure out how do we do this retirement thing, I always thought that was really stupid. It never made a lot of sense. Wait a minute, let me get this straight. I'm going to save my whole life. I'm going to save. I got to save I got to get as close to 50% of my income that I need to save in order for me to be able to retire. This works really well for people who make pretty decent money. I mean, if you're in the top 5%, top 10% of wage earners, you can save 50% of your income pretty easily. The problem is that when you're not in that upper echelon, everybody else is in the 90%, right? 95%. So what are they supposed to do? They're supposed to save for retirement? They can't. Well, they're going to live on Social Security. What is that, like $1,000 a month? I don't even know what Social Security pays. And if you're under the age of 50, I wouldn't even count on Social Security. So what are you supposed to do? Oh, well, I'm going to save. I'm going to put my, it's taking me 10 years and I got $100,000 in my IRA. Good luck. Good luck, dude. You get to retirement, you got $500,000. Problem is, we're living a lot longer. It's amazing to me how adverse everyone is to increasing the age of retirement. Folks under 50 are probably going to live till they're 100. You're telling me you can't work till you're 70, 75? But what if you don't want to work till you're 70 or 75? Well, make more money and save more. Make more money and save more. It boggles the mind that we were put on this earth to work more so we could save more, so we could retire, hopefully healthy enough to still do stuff. I don't know who came up with that plan. It's not a great plan. For me personally, it's not a great plan. Here's one of the problems. Let's say you want to do stuff with your kids. That's a finite window. You're not going to be doing a whole lot of camping trips when they're 40. I mean, you can, but it's a little bit more fun when they're younger. So how do you do that? Well, you've got to start investing. You got to invest your time and you've got to invest your money. Just got to start investing. And what do you invest in? Well, we invest in real estate. And why do we invest in real estate? It's real simple. When I buy a house, it produces cash today. Figuratively. Once it's rehabbed and I got a tenant in it, produces cash today. When I buy a house to flip, it produces cash today when it's sold. Say I go out and flip a house, make $40,000 flipping a house. And I can tell you right now that's totally doable. You only have to flip You know, a house between $250,000 and $400,000, you'll make 40 grand. About 6 months. Worst case scenario. $40,000. Now what do I do with that $40,000? I buy 2 or 3 rental properties. Flip one house, buy 2 or 3 rentals. Flip 2 houses, buy 5 or 6 rental properties. You do this flip to rental twice a year. Flip 2 houses, buy 4 to 6 rentals. You do that for 5 years, 6 houses a year, 6 rental properties a year. For 5 years, you got 30 rentals in 5 years. Producing, if I were to guess, $300 a month in cash flow, plus the appreciation, plus the mortgage is being paid down. I'm not even paying the mortgage. We don't talk a lot about that on the radio show, but it's amazing to me when people say, well, Jason, what if, let's say leases go down and I'm just like at break even month over month. Yeah, somebody else is paying your mortgage. If nothing else happens and the house breaks even at no rent, in other words, net zero, somebody else is paying your mortgage. You get a free house. What's even better, let's say you put it on a 15-year note and it cash flows nothing, a big zero. At the end of 15 years, you get a free house for owning a rental property that a property management company is managing. You get a free house. Jason, is there risk in owning real estate? Absolutely. But you get a free house. It is not any more difficult than that.
1 minute.
You want to call on the show? Actually, just got somebody sent me a text message. 713-785-1817. 713-785-1817. But you hold on to these things long enough, and they just pay themselves off. Like, we get wrapped up in all this stuff that doesn't really matter. What if this? What if that? What if this? If you put all the numbers on a sheet of paper, you're like, how do I screw this up? It's real hard to do. Can you lose money? Sure, but I mean, compared to the stock market, heck, Elon Musk is begging for a check back from his suppliers. And I guarantee you somebody is invested in that. We get back from the break, we'll talk more about this. Jason Bible, Right Path Real Estate.
Mic's off.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but
Hey,
a
Jay.
comprehensive analysis of the market.
Rich Drake is
Give
on the
Next Gen a
phone.
call at
Perfect.
713-346-9911 or check us out online at nextgenappraisals.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com. Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm
1
Jennifer
minute.
Hernandez,
Okay.
Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts.
All right, 10
Benchmark
seconds.
Insurance
Okay.
Group of Texas. 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
This is Business 1110.
All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. We got a caller on the line. He's a single-family real estate investor and a landlord. Rich Drake. Rich, how you doing?
What do you say, Jason? How are you?
I'm doing good. I'm just trying to convince people to buy some single-family houses, and I know you've been doing this for, almost 20 years now. So what are you seeing out there for landlords and folks that have invested in the long term?
Yeah, I'm seeing a pretty good atmosphere in Houston right now for buying and holding. I'm driving down the road, nodding my head as you talk, and then when you started talking about risk, we take risk in real estate. Well, let's back up about 5 minutes to the risk you take when you have one boss at one company whose things change and you're gone. I think an employee takes way more risk than an entrepreneur. When you think about it that way, there's no telling when the atmosphere changes at a company and they let go half the staff. So, you could be doing everything right and be gone. And here, yeah, you're right. The market could go bad and we could get a little bit less rent. But as long as we can cover our expenses and ride it out in the long run, real estate's not going to go down in the long run. Maybe in the short run, but not in the long run.
Yeah, I agree with that. I worked for a company for a while. I think I had 6 bosses in 18 months. It was just absurd. And the staff, everyone gets all frothed up. Oh, my gosh, who's going to be here, who isn't? It's like you don't have any control over that. You really don't.
No.
So it's fascinating to me when people talk about diversification in their stock portfolio, but they never talk about diversification in their income. Or look, I've got this job, I'm making good money, so what's my plan B? Do I have some, single family investments over here, some real estate investments? So what do you see? You work with a lot of real estate investors. What do you see the most successful real estate investors do? What do they do over the long term?
Buying and flipping is great. It creates cash, like you said, but that's just another job. I mean, you stop buying and flipping, you stop making money. So the person that buys and holds, the Warren Buffett model for real estate, he buys and holds quality companies for a long time. Well, we buy and hold quality properties for a long term because you mentioned Apple. Apple's just going to sit there and click away and gain a little bit. You don't look to Apple for your income, right? You don't sit there and watch Apple's value go up as income. It's like rental property. Everybody cries, cash flow this, cash flow that. That's not what it's for. It's kind of like your Apple. You just let it sit there and go up in value. You were talking about how, you're paying the note down. Someone else is paying the note down. And that's all great. And I'm banging on my steering wheel going, Jason, tell them it's the appreciation. It's the appreciation. That's where you're making all your money.
Oh, I know. It's
20% down. Yeah, your appreciation is a multiple of all the other things.
Right. Oh, no, I agree with you. The appreciation, that's what we beat into everybody at the weekend retreat. It's like, guys, the cash flow is the cherry on top. The debt pay down, the tax all that stuff is great. The appreciation is where you're making your real money, and it's a leveraged rate of return. You're able to borrow money at 30 years for like 5.5%. I'm like, are you going to get a loan for Apple stock at 30 years at 5.5%? Probably not.
Well, and the increase in the value, think about it. The way we buy properties, you and I and a lot of the folks that are listening, they're not paying exactly retail. And even if you're only getting, say, 10 or 15% below retail, and you do a little sweat equity and fix it up a little bit here and there, you're still in it for 80, 85%. And when you go get your loan, you're getting your loan for 80 cents, 75%. So you're really not in it for 20% like the traditional investor. You may be in it for 5 or 10. And now you multiply that yield by 10 instead of 5.
Oh, yeah. So, Rich, I asked the audience this weekend at the weekend retreat, and we were talking about, I hadn't even gotten into buying houses at a discount yet. And I asked them, because we had a couple of landlords in the room. We had a couple of guys that had, 5-10 years experience. And I said, hey, you guys that have been doing this for about 10 years now, are there properties you wish you had bought back 10 years ago? And everyone's like, oh, yeah, we should have bought more houses. And I said, let me ask you this. Would you have, knowing what you know now, would you have paid 100% retail for those houses 10 years ago? And they all said yes. And so one of the things I tell people is, guys, it's as long as you're not paying more than the market rate, it really doesn't matter what you pay for these things. It really doesn't. It's just get them financed, buy the things, and get them in your portfolio as fast as possible.
I've seen a lot of properties, Jason, where, a lot like a Missouri City, some of the Sugar Land areas where, the retail value of the house is, let's call it $125.
Mm-hmm.
That's the top of the market, and they're renting for $1,400. Well, that tells me that market's ripe for appreciation because the rents have outpaced the value. Because 100 times rent is kind of the rule, right?
Right.
And so you look at that and you say, well, heck, pay retail. Why not?
I agree. The way I look at it, especially we're starting to see this change this year. Like I'm starting to see appreciation is catching up with rents. But when I look at a house that's a $1,500 a month rent and the house is only worth $120,000, what I know is that's really a $150,000, $160,000 house. It's just the buyers haven't come back into that market yet. Yep. And it's only a matter of time until it does. Correct. It's absolutely going to happen because tenants know this. If it's cheaper to buy, then let's figure out how we can save up enough money to buy a house instead of renting this thing. That happens. It's that natural cycle in real estate.
Sure.
So what else? What other kind of tips and tricks, that sort of thing, do you have for the new real estate investor, Rich?
Oh, you pulled the tips and trick question on me, huh?
Yeah. Well, I know one. So I know one. Buy. Right? Because I have not met a single real estate investor that said they wish they bought less property 5 years ago. It's to buy more real estate.
Well,
that's one.
I guess it's not really a tip or trick. It's just a mindset. Remember, everyone says cash on this property is this. Your cash flow is this. Yeah, you want every penny of cash flow you can get. Don't get me wrong. But you can't go into these investments looking at that can't be your main goal. You don't buy Apple stock because your main goal is that 1.5% dividend, right? You go into it because you see value and you see it's going to appreciate in value. and you can get in it for a very small percentage of that total value and let that return multiply. Instead of just putting $100,000 down and it's going up 3% a year, you put $15,000 or $20,000 down and it's going up. $100,000 value is going up 3% a year. You're still making that 3% on 100, but you're investing a whole lot less.
Yeah, that's a good point. So guys, in real estate, we're getting leverage returns. So let's say I buy a $100,000 house, I'm out of pocket $20,000. Well, that $100,000 house is appreciating in the worst years at 3%. So that's $3,000 a year appreciation on a $20,000 investment, $20,000 cash into that deal. We're seeing in areas of Houston that are north of 10% a year, which makes these returns absolutely insane. Now, will that happen forever? No, there's always natural cycles and all that. But, I mean, you mentioned Missouri City and Sugar Land. We've seen houses double in price in 7 years. I mean, it's absolutely insane. And it's not stopping.
I got to tell you about my Friendswood deal. So I bought this one in one of the cheaper areas of Friendswood School District.
Mm-hmm.
I paid $110 for a pretty trashed rent house. It was occupied, so it was up and running, but it was just rough.
Mm-hmm.
So I sold it for $135 to a friend because he needed a place to live and he wanted to fix it. It appraised at $165 when I bought it. So if you look at it, $110 that needed quite a bit of work for $165. I didn't steal it.
Right.
It was not a very good deal. So he fixed it up. He moved into it, and then I rented it to him while he was fixing it and all that. But I had an agreed price of $135. When he appraised it 10 months later, $205.
Wow. So from 165 to 205
in 10 months.
It's insane. It's absolutely insane. These rental properties that are below the median home price are seeing the most price movement. We got a couple in our group, in our club up in Dallas. They bought a house sub 2, and I can't remember the specific numbers, but it almost doubled in value in a year. I mean, it was $60,000 or something like that. It was some absurd number.
1 minute.
And when they bought it, it was a marginal deal when they bought it. It was cash flowing. They had a tenant in there, and they went back and they started looking at their portfolio, what they had equity in. They looked at this thing and they're like, you got to be kidding me. It went up that much in value. I didn't even notice it. And it's those houses that are at or below the median home price. That's where all the action's at. All these people moving to Texas for jobs, and especially since the new tax laws come into play, these high tax states, these people are getting out and they're moving to Texas. So we got 30 seconds here, Rich. Any other advice for our listeners today?
Man, I can't say anything else. These single families, $1,200 to $1,800 rental range, hold them 5 or 10 years, and you'll be glad you did.
Yeah,
I can't say much more than that.
Go to any of these networking events. Go to our big Wednesday. Yeah, that's what Rich is doing, and we're doing the same thing. Go to any of these networking events. Talk to any of these real estate investors that have been doing this 5, 10, 15, 20 years. They'll tell you the same thing. Every single one of these guys will tell you, I should have bought more. I should have bought more. I shouldn't care about, as long as I'm buying at market price or less, it really doesn't matter. It really doesn't. So, well, Rich, thanks for being on the show.
Focus on the school district.
That's right. Good schools.
Thanks for having me.
Yeah, thanks for calling in. It's Jason Bible, Right Path Real Estate. We'll be back right after the break.
Mike's off.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention
Thanks, Brian.
Path Real Estate.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any
What are the
investments
next events
or
we
give
got
advice.
coming? Oh,
However,
we got
we do hold free
free
networking
workshop.
events, weekly educational
Is
classes, and free
Tuesday,
consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
You found or inherited a great
30
investment
seconds.
property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. You want to learn how to invest in real estate? We teach that. We teach how to flip, wholesale, buy and hold, and lend your money to real estate investors. We're the only real estate club in the entire country that teaches the 4 ways to make money in real estate. The 4 ways to invest in real estate. We are the only ones. We have a intro workshop tomorrow night, Tuesday. It's a little taste of what it is that we teach. It's completely free. Starts at 6:30. If you go to rightpathrealestate.com, you can sign up there. We're doing a short presentation on how to make real estate work for you, whether you need income today through wholesaling and flipping, which is exactly what Rich was talking about. That's for cash flow today. Or to build a rental portfolio to help you build your wealth. So we talk about the income side, we talk about the wealth side, and we share with you how you can do that here in Houston, Texas. You don't have to fly all over the country to do real estate in some weird market out in the middle of nowhere. It's right here. All the action's right here. If you are in Houston, we'll be here tomorrow night at our office, 11451 Katy Freeway. We're on the 3rd floor. Again, you want to go to rightpathrealestate.com and sign up there. The workshop to Introduction to Wealth and Income workshop. Be a lot of fun. About an hour and a half. There'll be a little Q&A. But we share with you how we build our wealth with real estate, what we're doing in our portfolios, what we're doing in our businesses. We share with you deals that have taken place in the past. Those are through our case studies. Go to our website. We got a ton of case studies on our website. You want to see what our members are doing, it's all over the website and YouTube. If you want to listen to past episodes of this show,
2 minutes.
You go to Facebook, YouTube, and iTunes. It's all there. I'm telling you, folks, here's what I'll tell you. 99.9% of the people that I run into in real estate have one regret, and it's not buying, and it's buying more property when they first started. That's the number one regret I hear from every single real estate investor. They wish they bought more property years ago. And I'll tell you what, if you don't start today, you're going to regret tomorrow that you didn't start today. If you don't start tomorrow, you're going to regret the day after that you don't start tomorrow. So join us Tuesday night, 6:30, 11451 Katy Freeway. We're just outside of Memorial and I-10 in the Beltway. Go to rightpathrealestate.com. You can sign up there for our Intro to Income and Wealth workshop.
1 minute.
And I will see you guys there. Tom will be on the radio show tomorrow with Build Your Team Tuesday. And then we will both be in the studio on Wednesday. Thanks so much for listening, guys. And we'll see you in our next events. Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
Great. Thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.